Every day it seems that more and more risk is present in the system. One event after another takes place and suddenly people forget about the previous one, yet the underlying risk is still there. There can never be a time in which risk will not be around, but surely we are in a time where our fragility and the potential for disaster has seldom been more obvious. You came here for the truth, so let me unveil that for you. I'm going to take you around the world today to talk about the top 10 global risks. Let's begin. What you are looking at is a report out of The Economist's Intelligence Unit. It is called Cause for Concern, the top 10 risks to the global economy. I don't necessarily agree with everything that is said here, but I believe it's important to take a look at this and see what they have to say. These are the global risk scenarios, and I want to focus on the financial aspects. Equity market crisis triggers economic recession. This is something that has been talked about as of February 2018. Prior to that, we had seen volatility at record lows, and it was there for such a long time and continuing to fall further and further. And I will touch on that more in a moment. I believe that if we see equity markets fall by about 15% over a few trading sessions, that this could trigger a big downturn. And of course, that would spill into Canada, that would go into Europe, as well as Asia and other places as they all tumble down. This is a snowball effect. And of course, the market never prices any of this risk in. And that's the big issue, because they assume that everything will be taken care of. And it never is. You look at oil. Oil is a big problem for those countries exporting it, particularly when it makes up a large percentage of their revenue, whether we are looking at Venezuela, whether we are looking at areas in the Middle East, Russia, and other places as well. You need to understand the geopolitical risk that goes along with that. This is very important. Things that need to be thought of, that at any moment the spark can ignite and we have a big problem. What about China? Nobody ever wants to talk about a downturn in China, but the fact remains is that this has been an issue for years. China is this engine that continues to churn out more and more products. You can see their consumption is escalating to new heights, and that's a fact. Nobody will deny that. However, what we are looking at is the most massive public works projects that has ever taken place in history. So we believe, not we, but some people believe, that this can continue forever. Forever. No matter what happens, downturn in the US, major stock drop, nothing is going to affect what happens in China. There will always be massive growth. And I think that is a very, very silly thought to have, because there are always times in which we will see downturns. It doesn't matter where you look, whether it's US, China, or anywhere in between. So we need to look at this very, very clearly. So now to focus further on China, this is what they are saying. China is expected to post another year of robust economic growth in 2018, but questions remain over how long it can delay efforts at deleveraging without triggering issues in the overstretched financial sector. When you look at the debt to GDP, you can see that it has risen quarter after quarter. But then again, all countries have the same problem. And then you look at the derivatives going higher and higher. All of these products out there, when you think about, no matter which country it is, credit card debt, mortgages, car loans, anything else in between, you need to understand that these are all taken from these companies where you took out that debt from. They package it up, they securitize it, and they sell it off as an investment. So understand that where you have that, let's say GDP or traditional assets, On top of all of that are derivative products. And these are the ultimate risk that wasn't even mentioned. Derivative products are the worst of the worst. And I'll argue with people as long as I can about this issue. When we talk about this, credit default swaps, many believe that credit default swaps were the official linchpin that destroyed Greece. Either way, what we can see here is that there are several risks along the way, but that's not being priced in. That's not being, put as a factor, ultimately because they believe central banks will be there to bail them out. Now, looking at this chart, the top 10 global risks in order of intensity. Look at number 1. Prolonged fall in major stock markets destabilizes the global economy. That's number 1. Also, global trade slumps as the US steps up protectionist policies. Additionally, we're looking at global growth. We don't hear that too often, but if there's too much inflation, too much growth, above 4% as they suggest here, we are going to have a problem. I don't think that's necessarily an issue that we have to worry about more deflation at this time. And oil prices, again. So they are suggesting that a global stock market drop will be a very big problem. And I do believe that this is a factor. It's not being considered because, as I said, the Fed will be there to backstop any issues, lender of last resort. Don't worry about it. And this is a very, very silly notion. Because even look at the last financial crisis. The Federal Reserve printed a few $1 trillion and they engaged in QE 1, 2, and 3. And so their intention was, of course, to stabilize the markets. But they also engaged, the government engaged in TARP bailouts. They had this cash for clunkers program. They had so many different programs, in fact. All of them, we found out later, were either a failure or they basically gave billions of dollars to give money to these big corporations who squandered it. That was a fact. It came all out there and nothing was done. Nothing at all. There was little bits and pieces brought into the media, little bits and pieces maybe in Congress, just little, little sly remarks here and there, but nothing was ultimately done. And that's because the people who are in the government, of course, work directly with those in these industries. They're friends. There's no doubt about that. So the underlying risk that is there, that is present in our system, unfortunately, is never, this is today, this is financialcrisis.com, doesn't matter. Go as far back as you want. These risks are there. They become ever more apparent to those who pay attention, but those who ignore it, those who keep their head in the sand, will not realize it until it's too late. This right here, I've talked about it before, but I need to really reiterate how important this is. And you can see directly from the Federal Reserve's own website, a meeting back in 2012. You can see that we are looking at, right here, how they admit, right here, our short volatility position. This is so important. And individuals refuse to believe it. Individuals refuse to understand what this means. They talk about the fact that, yes, we have to sell off. This was back in 2012, remember, that it will happen. We're going to have to start unloading $80 billion a month at some point. But he says this. Another way to look at it, though, is that it's not so much as the sale, the duration, it's also unloading our short volatility position. we have to realize what they're doing. They're manipulating this system. They are purposely making this more and more dangerous. Okay, very quickly, 2 more points I want to make here. You have seen what they're calling the retail apocalypse, 23 big retailers closing stores. This information is as of 2018, but I've been covering it over and over again, for years. And you could see that more and more stores closing up shop. They like to point to Amazon as being one of the issues, the main issue here, but I believe it is the economy that is a factor. Yes, Amazon is definitely a situation, but we are looking at, last time I checked, about 9% of sales are online. If 9% of total sales are online, you can't really put all the blame onto one company, though certainly more and more people are buying online. But if you think about the total amount that one person does online compared to everything else that they buy, I think that we need to really understand what's going on here. Now, I just want to scroll through just for you to see some of the companies here. Big corporations are closing down their stores. A lot of them I'm finding here are clothing stores, but it's not necessarily the case. You could see even CVS Pharmacy potentially because of what Amazon is doing. That's obvious, but here, doesn't matter. You can see all of these different stores closing up shop. Companies that may have been around for quite a while, in fact, and unfortunately doesn't seem to be have that staying power, but they're all doing so right around the same time frame. It's not just one store closes and 3 years later another major store closes. It's happening one after the other after the other. All right, last thing I wanted to cover here, gold and silver. I know I have a lot of gold and silver fans out there. Wanted to cover this. We are now at a time. This is not the gold and silver price necessarily, but what we're looking at here is a disparity in between gold and silver. And what I'm reading here is that we are at a time in which there is heavy pressure downward on silver. And this, of course, is very bullish for silver, because when everybody is hating on something, that may be, not necessarily, but may be an opportunity to come in as a contrarian bet. So just wanted to note that we are at this time here looking at back from 2003 in this particular indicator. So look at it. If you're into investing in precious metals, look at the difference between gold and silver right now, not just in their price, but also the sentiment that is taking place right now. How many people are shorting this silver at this time right now in 2018. That's all for this video. If you found it informative, please give me a thumbs up. I'm bringing out videos every single day. I'm covering topics nobody wants to cover for some reason, and I think it's so important. We need to be able to have a handle on our own finances. We need to have the knowledge, and you're not going to get that in the mainstream media. So what I do here is I piece together all the information. I hope you found it very informative. Of course, you can hit that subscribe button to join one of the 91,000 approximately subscribers that are on here. So just wanted to say hello to everyone who has joined recently. Thank you all for being here. If you found the video informative, I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can flip through these books at Amazon. The links are in the description below. Take care.